Listen carefully. Most traders will never become profitable, not because they are stupid, not because they lack intelligence, and not because the market is impossible. Most traders fail because of behavior, habits, emotions, and painful psychological mistakes repeated every single day. That's the truth nobody wants to hear. Because it's easier to blame the market, manipulation, bad luck, or strategy. But the market is not destroying most traders. They are destroying themselves, and in this video, we're going to break down exactly why 95% of traders never become profitable. From beginner mistakes to intermediate trader psychology, to the emotional habits silently destroying accounts every single day. And trust me, some of these truths might offend you, but they could completely change the way you trade. Let's start with beginners. Most beginner traders enter the market emotionally, not professionally. They come into trading desperate for fast money. They see social media clips of luxury lifestyles, fast profits, massive wins, and suddenly trading looks easy. So they rush into the market with unrealistic expectations. They think, one good trade can change my life. Nah, and that mindset becomes dangerous immediately, because desperate traders do not think clearly. They force setups, overtrade, risk too much, and emotionally depend on every single position. But trading does not reward desperation. It punishes it every single time. Most beginners are not addicted to discipline. They are addicted to excitement. That's why they love fast entries, big lot sizes, constant action, and emotional trades. They say they want consistency, but their behavior says they want dopamine. Because disciplined trading feels boring. Waiting is boring. Risk management is boring. Patience is boring. And most people cannot handle boring. So instead of waiting for quality setups, they trade constantly, even when there's no opportunity. And that habit quietly destroys accounts. Another reason beginners fail is strategy hopping. One strategy loses twice, and suddenly they abandon it. Now they're searching YouTube again, looking for another indicator, another mentor, another secret setup. But the truth is painful. Most traders do not fail because of strategy. They fail because they never stay consistent long enough to master one. Professional traders understand this. Consistency creates confidence. Repetition creates skill. But emotional traders keep restarting every week. And restarting destroys growth. Now, let's talk about one of the biggest account killers. Ignoring stop loss. This is where emotions become dangerous. A trader enters a position confidently, but the moment price goes negative, fear appears. Now they start hoping, moving stop loss further away, or removing it completely. Why? Because they are emotionally attached to being right. But the market does not reward hope. It rewards discipline. Professional traders accept small losses quickly. Emotional traders fight losses emotionally. And emotional fighting destroys accounts. Now here's where things get interesting. Intermediate traders usually understand strategy already. They know technical analysis. They know entries. They know risk management. But they still lose. Why? Because now the battle becomes psychological. This is where ego enters trading, and ego is extremely dangerous. Intermediate traders start believing they are smarter than the market. One winning streak happens, and discipline disappears. Now they increase lot sizes, take random setups, overestimate their skill, and become careless. That's why many traders fail after winning, not after losing. Losses hurt emotionally. But profits can destroy discipline silently. That's the dangerous part. Winning creates emotional blindness. Now, traders stop respecting risk. They stop following rules, and they begin trading emotionally again without realizing it. Professional traders stay emotionally neutral even after wins because they understand something most traders ignore. The market can humble anyone. Now, let's talk about revenge trading. It is one emotional habit responsible for countless blown accounts. A trader loses money, and suddenly patience disappears. Now, the goal is no longer following the plan. The goal becomes recovering losses quickly. So they force entries, increase lot sizes, and emotionally chase the market. That's not trading. That's emotional desperation. And desperation always creates poor decisions. Professional traders understand something important. One loss means nothing, but emotional reactions after losses. That's where real damage happens. Consistency is the real challenge in trading. Not intelligence, not strategy, consistency. Because consistency requires emotional control. It requires discipline on bad days, discipline after losses, discipline after wins. And most traders cannot maintain emotional balance long enough. That's why they repeat the same cycles over and over again. Winning streak, overconfidence, losses, emotional reaction, blown account, restart, and the cycle repeats. Social media has made trading psychology even worse, because now traders constantly compare themselves to others. They see screenshots of profits, luxury lifestyles, big wins, and suddenly they feel behind. Now they feel pressure to succeed quickly, pressure to trade more, pressure to force results. But pressure creates emotional trading, and emotional trading destroys discipline. Professional traders move differently. They focus on process, not social media validation, not flexing profits, not impressing people, just execution. Here's the real difference. Winning traders think long-term. Losing traders think emotionally. Winning traders protect capital. Losing traders chase excitement. Winning traders stay patient. Losing traders force action. Winning traders accept losses calmly. Losing traders take losses personally. And that single difference changes everything. Because trading is not just technical. It's psychological warfare against yourself. Discipline feels boring. That's why most people avoid it. It means doing less, taking small losses, following rules repeatedly. There's no adrenaline in discipline, no excitement. But boring habits create powerful results. The trader who survives long enough eventually improves, and improvement compounds over time. That's what emotional traders never understand. Consistency beats intensity. So if you truly want to become profitable, stop searching for magical indicators. Stop chasing shortcuts. Stop forcing trades emotionally. And start focusing on behavior, discipline, patience, consistency. Because profitable trading is not about predicting every move correctly. It's about controlling yourself under pressure. That's the real edge. Not intelligence, not secrets, self-control. And the traders who master themselves eventually master the market. Welcome to Trade Rituals, where discipline beats emotion.